welcome to the CodCast. I'm Chris.
And I'm Matt.
Matt, we put out a 105-page document this morning, another scoping study update, this time heavily focused on metallurgical recoveries, a pretty major improvement right across the board to net present value, especially with the post-tax NPV, and we'll talk a little about why that is. So even on a pure apples for apples basis, this has been a huge win. Increased knowledge of the ore body, increased knowledge of the mineralization, how the metallurgical processing works in the lab, and then some flow sheet improvements. So can you tell us a little bit about what we've done, what that process has been, what's gone well, what's not gone so well?
Yeah. So with the Met, we've been talking about this in the market for a few months now. The main change that we've been really working towards, or at least that we started on, was the integration of some new oxide collectors, basically aiming to make sure that we capture as much of the copper as we can, not just the sulfide, which is what you're traditionally chasing with flotation, but also the oxide. Yeah. So we've put out a few announcements on that, and the final work has just been completed in the last few days. Yeah. And the result of that has been pretty positive, but it wasn't until we started to integrate a second mill and float step, basically regrinding some of our tails again and then floating them again to get just that little bit more juice out of the squeeze and increase our recoveries that way, that it all really started to come together for us. So between those two changes, we've seen a pretty massive increase actually at MG14. That's the copper recovery there has gone up by about 20 points. Yeah. So 20%. It's gone from about 55 to in the 70s. Yeah. And we've seen a smaller but still important increase of close to about 5% at Emmie Bluff, which is our sort of largest deposit. So while it's a smaller increase in recovery terms, in terms of the impact on the overall project, it's pretty significant.
Yeah, absolutely. And, again, to put this in context, and we've used this analogy before, but 5% more out of Emmie Bluff, assuming roughly a 75% kind of conversion of resources to, production target stroke, what would normally be called reserves for a more advanced project. I mean, that's like finding 7.5%, 8% more resources that go into the mine plan, but you don't have to mine it. You've got no process, you've got no costs of that. So this is...
And just as important for a company at our stage, you don't have to pay to drill it out.
Yes.
Met test work is a lot cheaper than drilling.
Yeah, absolutely. So we talked about the fact that these recoveries are pretty material. They're like finding a significant additional amount of resources, but we don't have to drill them. Copper's gone up. Yep. Silver's gone up a lot.
Yeah. Silver pretty much lives with the copper at Elizabeth Creek. So when your copper recoveries go up, your silver recoveries come along for the ride.
Yes, maybe this is a good time to seg into commodity pricing. So we've increased the copper assumption just a little bit from 8.8 to 9.260 if you think about dollars per tonne, and from $4 a pound to $4.20 a pound.
Yep.
Rationale for this is obviously we're talking to some fairly major groups. That seems to be what they're underwriting. We also know that New World Resources, Antler Copper Project in the US, their recent PFS used $4.20 a pound. Xanadu, I think they used $4.10 but flexed it up to $4.50. They tend to give a range, which I think is a very professional thing to do for PFSs in particular. Carnaby was using $4.50 plus. It was like $10,000 a ton.
Yeah, it was pretty good. But I mean, in thinking about that, I think it's pretty much consensus at this point that we're going into a fairly substantial copper shortage over the next few years. And while we are slightly above spot, I don't think that any of them are unrealistic or overly optimistic.
Well, we're above spot, but we're actually not above the 6-month and 3-month average pricing, which are both over $300 a tonne. Yeah. So, I mean, I'm a great believer in you don't use spot because goodness knows what happens day to day. You use average pricing, and again, we've disclosed fully in the economics section what the project makes at spot, and it's still very healthy.
Oh yeah.
And I mean, look, spot copper's maybe less relevant than spot cobalt. I can't find a forecast anywhere that says cobalt will stay where it is. The Cobalt Institute, Benchmark Minerals, none of them. And we've looked at several forecasts. We've dropped the cobalt price
It'll be starting at $45,000 a tonne.
43.
43.
Yeah, so about $43,000 a tonne. That's flexing up past 2033, back up to roughly where we were before. Funnily enough, the biggest forecasters in the world are actually forecasting the long-term price has gone up.
Well, the rationale for that, as I understand it, is that the cobalt price story is essentially an EV story and a battery story, and while the sort of scuttlebutt and the big story is LFP and non-cobalt chemistry is starting to eat into that NMC, which is your cobalt-containing battery chemistry, the overall pie is growing faster than the cobalt supply, even with a contracting percentage of that pie being cobalt-containing batteries. So,
and interestingly, the mid-nickel chemistry, which is partly being driven by the drop in nickel price as well. So there's a bigger part of the pie now is back into nickel because nickel's dropped. The mid-nickel chemistry is one of the highest cobalt utilising chemistries. The other really interesting thing for cobalt, so there's two. So on the demand side, the solid-state batteries can't be made without cobalt.
Right.
And everyone gets terribly excited about solid-state batteries. The other one on the supply side is that Glencore controls the cobalt market. They've been running it real hot.
Allegedly.
Glencore has a major percentage of the cobalt market, and things have been running pretty hot out of the DRC. There has been an increase in Indonesia. It's only about 9% currently. I think it's forecast to go to about 19-20% by 2030. But we're just not seeing the supply, especially the forecasters, more importantly, not seeing the supply come online beyond that. So again, supply is forecast to contract in a heavily increasing demand side market. It's also used in a lot of other things, paints. It's actually used in oil refining as well. So, it's not a pure EV story. It's about 55%.
Yeah. A lot of aerospace alloys as well.
Yeah, I tell you what, for those shareholders who are inclined, or viewers who are inclined towards the mineral economics nerdery side of things, go check out the Cobalt Institute, which has some cracking stuff online. Cobalt Blue publishes some quite interesting stuff. And then there is a little bit of free stuff from Benchmark, who are without doubt the world's foremost experts on this stuff. And I think most of the Cobalt Institute stuff comes out of Benchmark as well. So
as do our price forecasts.
As do our price forecasts. Yeah, you pay for the best. And again, I think we're very defensible on the cobalt price, but interesting pain for us because obviously it hits you early on. The way that a net present value works is obviously money closer to the start of production is worth a lot more than money in the future. That's your discount. And therefore the cobalt price being dropped quite so materially at the start and early years of mining has changed the economics. But the economics with those changes has gone up materially.
Yeah. We mentioned before the silver price, which is, again, pegged to this sort of green transition, in this case in solar panels. That's helped a lot.
Yep.
And there's no forecast that I've been able to find that suggests that silver's going down anytime soon. Solar's continuing, and there aren't any really big new supply sources exactly waiting to come online that I'm aware of. So, the market giveth and the market taketh away.
It's certainly true. The one thing we can't control are commodity prices, but we do our absolute best to use the most accurate ones and up-to-date ones. Silver's really increasingly important part of the project, which is cool. Critical minerals incentive, the future made in Australia. I know your team Albo to start with, so we'll keep politics out of the CodCast, but what about that?
Yeah, so that's been another nice little boost to the project overall. So the legislation, the enabling legislation, went through Parliament in that big marathon session a few days ago. Yeah. The gist of it essentially is there is a 10% production tax credit for the downstream production of high purity critical minerals, of which cobalt is one.
Yeah.
So it won't affect the pre-tax NPV.
No.
But you get a nice little boost on your post-tax NPV to compensate and encourage people to establish these kind of businesses in Australia.
Yeah. So we know Albo's a regular viewer, so thanks, Santa Albo. We do appreciate this one. Okay, you hit an interesting question there. So it's fairly material. It's I think we put $24 million value
Sounds
on
about
that
right,
in the
yeah.
post-tax NPV, a very genuine inclusion, one that one expects to get based on the current legislation. Let's talk a little bit about post and pre and post-tax NPVs, because this is really annoying. So, I mean, this is quite a polarizing one. We've seen many juniors only refer to a pre-tax NPV, and in fact, one in particular, which I shan't name, we couldn't find the post-tax NPV in the entire study, which is outrageous. Last time I checked, the ATO wants their share just as much as the people building the plant and the people working in the plant and the people selling you reagents for your plant. What's your view on this, Matt? I mean, what do you see?
I mean, it's important you have to include your pre-tax because people will tell you it's because if you get purchased by a major, their taxation implications are different and you need to be able to slot into their models very cleanly. The reality is you have to include it because everybody includes it. And if you're comparing apples with apples, you need to know what our pre-tax looks like so you can compare it against other projects and make investment decisions. But in reality, as you say, the tax man gets upset if you don't pay him. So we made, I think, fairly prominent disclosure of what our actual post-tax NPV would be. And overall, it remains a very positive number, I think. I think it's on the order of about 800 million.
802 million, which
There we
is
go.
phenomenal. Also a pretty big increase to the 510 in the
Yes.
previous one.
Yeah.
Some of that's driven by the Future Made in Australia incentives. Obviously, a lot of that, most of that is driven by the increases in the revenue from increased recoveries, showing what a valuable exercise this has been. So yeah, look, I mean, pre-tax, I think people have been conditioned to see pre-tax. My suspicion is it's just a bigger number. It looks more impressive. But I think shareholders should be cautioned to look at both. They are important.
They're both important.
And the post-tax and the CapEx figures always a big one for me. Is that 1-to-1 ratio where you can really see that a project is robust and sensible and stays robust under reasonable. You got to pay your tax at the end of the day. So we're recording this on Tuesday afternoon after the release went out, just after market close, which probably explains we're both looking tired. Reception today, I mean, 8% up roughly on close, which is no bad thing. Maybe slightly below my expectations. I think you were saying it was a little bit around yours, but it is a tough market.
Yeah, I mean, you don't have to look back too far to see lithium and nickel in particular coming down from some fairly high highs to the current fairly low lows. And I think that might have left a few people a little gun shy about commodities and mining investment in general.
Yeah, I am amazed sometimes when I get some of the more aggressive emails on the info line that, it's like, don't you look at other stocks? I mean, it has been tough. My whole copper watch list, and again, I think even gold juniors haven't seen that tick up, and I suspect it's because the cost of living is hitting everyone. And you've obviously had the huge drop in nickel and lithium, and let's be honest, I mean, the sort of silver and uranium boom probably hasn't made up for it that much.
No, I mean you need a bit of scale, I think, and uranium, as exciting as it is, isn't the scale of other commodities, and I guess that's where copper really does have a benefit. I mean, it's a $200 billion global market every year, and if the forecasters are to be believed, we're right there where uranium was just a couple of years ago. Just
absolutely.
Always darkest before the dawn, and we're about to head into a structural deficit that. As someone who watches the copper market fairly closely, I don't see an immediate solution for.
No, I mean, supply, the demand's obvious, right? And I mean, for the next 6 months, it's going to be horribly macro driven as Trump and Xi Jinping and, what they do is probably going to have as much an effect on copper as anything anyone else does by far, or more of an effect. But the reality is we're seeing that structural deficit. We've talked about this before on a podcast, haven't we? But I mean, like 80% of the world's coppers comes out of about 20 projects. Some of those are winding down. There ain't much exploration beyond it. I would much rather have a great asset in a crap market than the other way around.
Yeah, absolutely. What you obviously deal with a lot more shareholders than I do, and you attend more conferences than I do. What do you hear from people that you sort of wish you could correct that might explain, some of Coda's position within the overall copper space.
Yeah, look, the one that I get constantly, and it honestly drives me up the wall. I suspect anyone that's watching the CodCast will not have this issue, but is the depth. So, in 2021, right, we hit something between 800 and 900 meters in the basement, and that was cool, and it was exciting, and it's unfinished business. But I mean, for the avoidance of doubt, the mineralisation is not at 800 metres. There is some mineralisation at 800 metres, not a skerrick of it in the mine plan.
No.
Is under about 420. Most of it's at 400. And a quarter of the mineralisation is all in open pits.
Yeah, down at MG14, Windabout, and now Cattle Grid South.
Yeah, and that's one that constantly comes back to me. The other one is mining. And again, look, a lot of people do understand it's at 400 metres. I think it's a minority. But again, if you've only got time to remember one or two things about each of the 700-800 companies on the ASX that are in this sector, please, for goodness sake, I am not criticising anyone. You asked me about many projects. This is what I do for a living. I'm a trained mineral economist, and I still, that project, I can remember 2 facts if I'm lucky. So again, it's not a criticism, but at the same time, even for those people who understand the mineralisation, the deepest mineralisation we focus on is about 400. Is that sort of too deep, too skinny thing again? The mine planning, mine engineering doesn't keep me awake at night all that much, if I'm honest.
Yeah, well, I mean, the mechanical cutting that we introduced 2 iterations of the scoping study ago now, I mean, it's optimized, and the OEMs build these machines to mine at 2.4 meters, and our ore body is generally reasonably thicker than that in most cases. So it's well within the capabilities of the machines to actually do it economically and efficiently. That does have the downside of making it difficult for us to get met sample, but it doesn't really hurt the mining as far as our mining consultants tell us.
No, and we've had 2 different mine plans put together independently by different mining engineers, peer-reviewed by independent groups, and again going through sort of due diligence process with other groups. This isn't something that, as I say, I worry about all that much. Again, one of the benefits maybe of working in the industry as well as I'm aware of other projects. We did a slide a little while ago that was sort of all about, other mines. Yeah. Remember that? Great idea. I think bad implementation. I'm not going to blame anyone for not understanding it, but
we need a bit more graphic design, I think.
Yeah, it wouldn't hurt. But the reality is there are a lot of operating mines. So the brief that we sort of had was find all the operating mines that are roughly 2 to 4 meters in thickness, that are at least 400 meters in depth, and at comparable grades. So obviously they mine down to a couple, even beyond a couple of kilometers depth in South Africa, but these are incredibly high-grade platinum reefs, so that doesn't count. Yeah. But comparable depths, comparable grades, comparable thicknesses, comparable commodities, there are many operating mines around the world.
Yep. Central Europe has plenty of them.
What did keep me up at night? Recoveries, especially at MG14. And we've done a lot to improve that, not only the knowledge of the ore body, mineralisation, I should say, as well as improving those recoveries.
Yeah, and every time we do a program of met work, we learn a little bit more. We take work out of the PFS and bring it forward, and it's less work to do in the future and more understanding that we have now. Yeah. So it's valuable work, I think, very useful.
I see is we're increasingly we've done a lot of valuable work. We've got peer review mine plans. The processing work has been done to a very high standard, I believe. The financial model is very real. We've put a huge amount of effort into that, and that's my background, and Katrina obviously is phenomenal at that. It's a real project. Tough market. You just came back from Summit. Your comment was just people walking around.
Yeah, there seems to be quite a few institutional investors and large groups who are looking to get into these sort of smaller projects. And I think in Insto world, there's a lot of interest in copper and a lot of confidence in the long term. Yeah, hasn't fully translated down into retail world, but things keep going the way everyone expects them to go. I don't see why it wouldn't.
I just don't think you can fight the laws of economics with copper, and the supply simply isn't there in the longer term. I think there's a bit of a misunderstanding on energy transition that it's like some kind of switch and we're going to wake up one day and every car will be an EV. And that simply isn't the case.
No, it takes time, and government policies, as you say, have a hell of a lot of impact, and things ebb and flow, but the direction's really, well, it's all going one way.
And so to my mind, again, this is a massive step forward in the quality of our understanding of this project. It's a real project. I'm very happy to be involved with it.
Yeah.
And, to be honest, given how much of that work you ran and did a great job, I'm very happy you're involved with it too. So,
well, we try.
Yeah, put a lot of time, effort and work into that study, so I hope it comes out. With that, I'm going to have a devil's own job editing this one because we've stopped and started. I think we're a bit tired today. And you've got to get your son to Taekwondo lesson.
I do, yes. He'd be very upset if I'm late today.
As will I, as a lifelong Taekwondo practitioner myself. I wholly support getting your kids into Taekwondo. So enjoy your lesson.
I'm sure we will.
Thanks.
No.
And thanks everyone. Appreciate it. If you made this far, really appreciate it. As always, info@codaminerals.com or chris.stevens@codaminerals.com. Send us questions.
And we'll send you answers.
We will. Thanks.